Man, the AI boom, what a wild ride, right? Fortunes were being made almost overnight. But then came 2025, and that correction was a pretty brutal wake-up call. It reminded us all that what goes up on pure hype can come crashing down just as fast. So where was the real, sustainable money being made? Well, in this explainer, we're going to unpack the story of the quiet winners of the AI gold rush, the companies that were literally building the foundation for the whole revolution.
All right, so here's our game plan. First, we're going to rewind to that big AI market correction in 2025. Then, we'll pull back the curtain on the hidden sector that was crushing it. We'll dive into a specific company, Vertiv, as a case study. After that, we'll break down exactly why this whole strategy worked. And finally, we'll wrap up with an actionable playbook you can use for 2026.
Okay, so let's set the scene. 2025. It felt like a massive reality check for the entire AI market, didn't it? That initial craziness, where every new AI model seemed to promise the world, just evaporated, and it was replaced with some serious volatility. A lot of those high-flying, headline-grabbing AI software companies saw their stocks take a huge nosedive. Why? Because the market suddenly stopped caring about promises and started demanding real, actual earnings.
So, be honest with yourself for a second. Did you get caught up in it? It was so easy to get swept up in the excitement. If you were on that roller coaster, feeling those insane gains and then those painful losses, you are definitely not alone. It was a classic hype cycle, and it really hammered home the danger of investing in buzz without looking at the boring but crucial fundamentals underneath.
But here's where the story gets really interesting. While everyone was watching the big, famous AI companies stumble, another part of the market wasn't just surviving, it was absolutely thriving. There was an entire sector working behind the scenes, building the physical world of AI. And you know what? Most investors weren't paying any attention at all.
And that hidden winner was AI infrastructure. You know that old saying, right? During the gold rush in the 1800s, the people who made the most reliable fortunes weren't the ones digging for gold. Nope, it was the folks selling the picks and shovels. Well, this is the exact same principle, just updated for the AI age.
This really breaks down the two different worlds. On one side, you've got your pure play AI stocks. Super exciting, yeah, but totally hype-driven and prone to these wild swings. And then on the other side, you have infrastructure. Its value is driven by actual physical demand. It's not as glamorous for sure, but it has this incredible defensive strength because its business is tied to real contracts for boring but essential things like power grids and cooling systems.
I love this quote because it just nails the entire idea. Think about it. It literally does not matter which company creates the next amazing AI model. Every single one of them, every AI chip, every data center needs two fundamental things to even exist: a ridiculous amount of electricity and a way to get rid of all the heat they generate. This isn't a bet on a software trend, it's a bet on the laws of physics, and that's a much safer bet.
Okay, so enough theory. Let's look at a concrete, real-world example to see how this picks and shovels strategy actually played out. We're going to zoom in on a company called Vertiv, which is pretty much the definition of this idea. They specialize in the critical power and cooling stuff for data centers.
Now, Vertiv is not a household name. They're not making flashy announcements that get all over the news. They don't build the AI models. They build the critical systems that let those models run, the power distribution units, the giant cooling systems. They are the crew working behind the scenes, and their performance tells a story that the hype train completely missed.
And here it is, the punchline. Over 1,000%. Just let that sink in for a second. Over a multi-year period, right through that entire 2025 correction, the company's value shot up by over 1,000%. And this wasn't some one-week meme stock fluke. This was a sustained climb tied directly to the real-world surging demand for their products as the AI build-out went into overdrive. So the big question is, why? Why did this happen? What was the fundamental force that allowed a company like Vertiv to do so well? Well, like we said, the answer isn't in a spreadsheet. It comes down to the simple, unavoidable physics of how artificial intelligence actually works. Well, let's just connect the dots. It all starts with the new AI chips. They are absolute powerhouses, but they also guzzle an insane amount of electricity and get incredibly hot. So hot that our old data centers just can't handle them. They weren't built for this. This created a massive, non-negotiable need for brand new cooling and power systems. And here's the key. This demand isn't just talk. It's based on companies signing real, multi-year contracts to build out physical data centers. That is a way more stable foundation than just hoping people will like your new app.
Okay, so that's the big lesson from 2025. But how do we actually apply it to what comes next? Let's get to the most important part of this whole thing, building your own actionable playbook for 2026 and beyond.
So here are 4 key steps for that playbook. First, learn to follow the actual contracts and order backlogs. See where the real money is being spent, not just the media hype. Second, every time you hear about a new AI chip, think like an engineer. Ask, how much power does this thing need? What kind of cooling? Third, you've got to diversify your whole idea of what an AI investment even is. It's not just software. It could be the utility company providing the electricity or the manufacturer building the cooling units. And finally, be patient. Use free research tools to track these less glamorous but fundamentally crucial sectors. They often tell the real story.
So look, if you only take one single thing away from this entire explainer, let it be this. Shift your focus. Learn to look for verified, real-world demand instead of just chasing speculative buzz. You have to look past the social media noise to find the companies that are meeting the physical needs that all that hype creates. That's where the durable, defensive opportunities are usually high.
The AI boom proved once again that the most obvious investment isn't always the best one. As we look ahead to the next big technological wave, whether that's quantum computing, biotech, or something we haven't even dreamed of yet, the lesson remains the same. So the big question you should be asking yourself is this: what are the essential, overlooked picks and shovels of that boom? Finding them could be the key to building a truly resilient portfolio. Thanks for watching.